Alright, traders, stop what you're doing. Because this right here, this is the deep dive on Forex indicators you wish you'd seen a year ago. We're going full throttle into which technical indicators actually work, which ones don't, and how pros are stacking them for smarter, sharper, more profitable trades. And no fluff, this is based on actual long-term data, multi-year backtests, and the real indicators that traders with 7 to 8 figure books are using. Let's go. Now before we start ranking anything, here's the cold hard truth. There is no holy grail indicator, but there is a holy grail approach, and it's called contextual adaptive trading. The markets change, trends turn, ranges break, volatility explodes. So what works today might bleed your account dry next month. But guess what doesn't change? The way certain indicators perform in specific conditions. That's what we're decoding today. Let's start with the heavy hitters. Trend indicators. First on the podium, the Ichimoku Cloud. It looks like a mess, lines, clouds, crosses everywhere. But under the hood, it's one of the most robust trend systems ever built. Multiple studies show Ichimoku produced the highest net profit in 5-year backtests on euro to US dollar. It's not flashy, it's consistent. And in markets that trend, it crushes. What makes it so good? It gives you trend, momentum, and support/resistance in one visual. And once price is above the cloud with Tenkan/Kijun aligned, that's not noise. That's a green light. But maybe you want something cleaner. Enter moving averages. The OG. Simple moving average. Exponential. Weighted. Whole if you're fancy. They're all about smoothing price and revealing the underlying trend. A 50-day and 200-day SMA crossover. Classic golden cross. It lags, sure, but when it fires, it often signals a multi-month move. And when paired with filters like volume or MACD, it filters out a ton of the chop. Speaking of which, let's talk MACD. MACD is your trend and momentum combo. It's like having an MA crossover plus a histogram showing momentum shifts. Alone, it's decent. But in one study, MACD plus EMA crossover gave the highest profit factor of any combo tested, over 2.5 on pound sterling to US dollar. Think of MACD as your confirmation engine. When that histogram flips and you're already aligned with the trend, that's conviction, not coincidence. And for all you set it and forget it traders, these trend tools shine on higher time frames, 4H, daily, weekly. But let me ask you this, what if the market's flat? That's when oscillators come in. Let's talk about the RSI, Relative Strength Index. Most traders know it as buy under 30, sell over 70, but that's just scratching the surface. In long-term tests, RSI had a win rate over 79%. Yep, you heard that right. That makes it one of the most accurate timing tools ever tested. So why doesn't everyone get rich off it? Because accuracy isn't everything. RSI gives you a lot of small wins and a few nasty losses if you're fading a strong trend. But used right, it's a weapon. Now here's where it gets spicy. When you combine RSI with Bollinger Bands, magic happens. Let's talk about BBs for a second. Bollinger Bands adapt to volatility. They tell you when price is stretched beyond its statistical norm, and when price hits that outer band and RSI is overbought or oversold. You've got confluence. You've got edge. In fact, that combo had a profit factor over 1.6 on euro to US dollar. That's not theory, that's raw, back-tested performance. And this pattern keeps repeating. Indicators on their own, decent. Indicators working together in synergy, that's where the edge explodes. So what's the takeaway? When markets trend, lean into Ichimoku, moving averages, MACD. When markets range, deploy RSI, stochastics, Bollinger, Williams %R. But how do you know what regime you're in? Glad you asked. Meet ADX, the regime detector. ADX doesn't tell you direction. It tells you strength. Above 25, the market's trending. Below 20, you're probably stuck in sideways chop. You want to run trend strategies when ADX is high and range strategies when it's low. Simple as that. Now let's layer in some volatility awareness. The ATR, or average true range, isn't a signal giver. It's a measuring stick. It tells you how much the market's actually moving. Why does that matter? Because if your stops are too tight during high ATR periods, you're toast. And if you're sizing big in low ATR markets, you're taking on risk without reward. Pros use ATR for stop placement, profit targets, even position sizing. It's not sexy, but it's critical. Let me give you a real-world analogy. If RSI is the sniper rifle, ATR is your body armor. It keeps your trade alive when the market starts swinging. So now we've got trend tools, oscillators, volatility filters. What's left? Volume. Now I know, but Forex doesn't have volume. True for spot markets. But tick volume and futures volume? Close enough. OBV, on-balance volume, tracks volume flow. If price is rising, but OBV is falling, that's a red flag. If they're moving in sync, confidence. Then there's volume profile, the blueprint of where big players care. High-volume nodes are magnets. Low-volume areas. Price cuts through them like butter. Volume doesn't lead price. It reveals the quality of a move. And that's the difference between trading blind and trading smart. Now here's a killer stat for you. In the academic FX study we pulled, every single indicator strategy had profit factors under 1.4. But every dual indicator combo that was logically designed, profit factors above 1.6. Some over 2.0. You don't need 10 indicators. You need 2 or 3 that complement each other. Let's run some winning combos. EMA plus MACD, trend plus momentum. One confirms the other. RSI plus Bollinger, range reversal sniper. ADX plus Ichimoku. Only trade Ichimoku signals in strong trend conditions. ATR plus moving averages. Adjust stop losses to market volatility. Now think about your time frame. If you're scalping on 5 minutes charts, noise city. Stick to clean, fast-reacting tools like VWAP, short EMAs, maybe RSI with wide bands. But be careful. Most indicators lose edge on micro time frames due to randomness and spread costs. If you're swing trading, you've got breathing room. Daily Ichimoku, 5200 EMAs, MACD, histogram shifts. These shine here. Position trader. Weekly trend filters, macro volume levels, monthly RSI extremes. You're trading the forest, not the trees. No matter your style, here's the framework the pros use. Determine market regime, trending or ranging. Use ADX or even a quick EMA slope check. Pick your core indicator, Ichimoku, EMA, RSI, whatever suits your strategy. Add a filter, MACD for confirmation, ATR for stop logic, volume for trade quality, test and refine, backtest over multiple years, across different pairs, adapt markets evolve. So should your settings in your toolkit. Now real quick, what about the worst indicators? Parabolic SAR showed one of the lowest reliability scores in multiple tests. False flips, whipsaws, and poor performance in choppy markets. Unless you're using it as a trailing stop in a trend, skip it. Stochastic oscillator also underperformed in most backtests. Too noisy. Too many signals. Needs heavy filtering. But even the worst indicators aren't useless. They just need context, tuning, and purpose. Everything has a use if you know when to deploy it. Now, I've got a challenge for you. Open your trading journal. Yes, that thing you never write in, and log this. What regime is my pair in right now? What's my trend tool saying? What's my timing tool saying? What's my volatility measure saying? Am I forcing a setup? Or is there confluence? Because when you align trend, momentum, volatility, and volume, that's not luck. That's systemized edge. And once you do this enough, it becomes second nature. That's how you level up from guesswork to strategy. Look, if you've made it this far, you're not a hobbyist. You're serious about trading. And serious traders don't chase magic bullets. They build repeatable processes. So here's your recap. No indicator works all the time. The best indicators based on years of data are Ichimoku, EMA, MACD, RSI, Bollinger, and ATR. Combine 2 to 3 logically. Trend plus confirmation plus volatility or volume. Backtest it. Forward test it. Adjust based on regime. Trade with context. Trade with confluence. Now, I want to hear from you. What's your go-to indicator combo? What's working for you in today's market? Drop it in the comments. I'm reading every single one. And if this gave you new ammo for your trades, smash that like button. Subscribe for more deep dive, no BS Forex content. And share this with a trader who still thinks RSI overbought means instant short. Stay sharp, trade smart, and I'll see you in the next one.